Time now for futures in focus. Oil is climbing. Haven't seen that for a while. If the trend holds, crude will break a record 12-day losing streak. Nat gas has been on a tear as well as the winter vortex makes itself felt. Phil Streible joins us now to talk about what is happening in the markets at the CME. Phil, these are whippy markets. When you look at the guys and what's going on around you, are people getting carried out on margin calls here?
Well, there has been a significant upswing in margin calls, and if you look at the volatility in the market, they have exploded, and it shows purely in the option premium. You could track volatility in options to see how that's going. If you look at the movement in natural gas, just overnight, it was about a 90-cent range, which is $9,000 per contract, and with the margin requirement only being about $2,500 to $3,000, you know, it's far exceeding what normal market conditions would justify. In a $4 move yesterday in crude oil, the margin on it's only about $5,000 to $6,000. So we've already, exceeded what the margin to the price movement is.
Are people talking about oil finding a base here?
Yeah, I mean, we've been down 12 straight days. And just remember, about 2 weeks ago, we were up at, multi-year highs. So I think the $4 move that we saw lower was a result of a lot of margin calls, things like that. That tends to have a washout. Remember, traders, they tend to act irrational once we see these types of volatile movements. So a recovery, I think, is in the cards. And we should start to see producers weigh in if they're going to continue at these heightened production levels. We've already got U.S., Russia, and also Saudi Arabia near that record high. The demand has been slacking from China, and you could also see China slowing down. There was a miss on the retail sales numbers this morning, but I do think that oil prices should find a base here and start to recover up to $60, $65 over the longer term.